This training video is going to be on goal setting through a framework referred to as building blocks. Okay, it's something that we at Digital BGA have implemented. We've passed it down to several agents and agencies, and we've seen a lot of success for the agents that implement this. Okay, it gives structure to your goals to hit milestones one at a time. All right, we're going to go through a sample business building block, or what it would look like for an agent trying to hit their income goals in this video. But first, I want to preface this by saying that a lot of the business advice given out in the industry today is pretty much BS, right? If agents are out there and agencies are out there trying to show you how to grow a business and they say you can grow doing this one thing, then everybody in this business would be rich, right? The handful of techniques that they might teach you, and if everybody would do it, guys, don't fall for it. It has to be structured. Your growth in this business has to be structured. There's no secret to it. The truth is, business growth for life insurance telesales comes down to two things, all right? The first being just staying in the game. You have to understand that your pipeline is going to take a while to mature. If you're a new agent, it's going to get better every single month as your pipeline matures, but you've got to give yourself enough runway to make it work. So staying in the game there, understanding that every month you'll be more profitable as those attempting contacts or leads that you bought a few weeks ago, you start getting a hold of and making sales. Those follow-ups start hitting. Some of those sales you made, they start paying out, right? It's going to get better every month that goes by as your pipeline matures. Stay in the game. Another thing, your presentation. You have got to get your reps in. You've got to get the experience with your presentation. You will get better. You will make more sales of contacts made as you learn to navigate the smoke screens and the objections and all the different situations that come with working the lead type that you're working. That will make you more profitable month by month, but you have to stay in the game. You've got to get in those reps to make that growth, right? So again, it comes down to just staying there and being in the game. Every agent is going to go through a sales slump. The veteran agents, the top producers all go through sales slumps. Pro athletes, they go through slumps, right? The best pro athletes in the world go through slumps. The only way you can fail in this business is if you quit. Look, if you're an unprofitable agent right now and you want to turn it around, you feel like this is the business for you, you just can't, something's not clicking, you have time to turn it around. You just have to stay in the game and make a pivot. There's something that's missing from your business, a skill set that you have not been able to pick up yet that you need to learn. I recommend going to our video called The Life Insurance Telesales Growth Ladder, okay? We'll link it in the description below. Knowing where you are in the business and the skills you need to build, that's important. And that's a determinant of success. And if you want to stay in the game, you've got to build skills one by one. And this goal setting video is going to go through building a structure to to hitting your goals. Again, hitting something one by one. You just have to stay in the game to keep improving. Okay, number 2, ruthlessly eliminating inefficiencies. Every agent has inefficiencies, even the best ones. All right, inefficiencies in maybe lead acquisition costs, contact rate, sales rate, placement rate, persistency, retention systems, referral systems, all of that. Every agent or agency has inefficiencies to work on. This goal setting via building blocks, right? It's about taking care of those inefficiencies one block at a time. Right? Not focusing on all of them and having this whole thing like, I have to get overall better at all of these. It's picking out your biggest weakness, focusing on it, eliminating that weakness, and then moving on to the next one. You're going to see a lot more powerful and quicker growth by going through this goal setting through these building blocks, all right? This goal setting exercise is what we do at Digital BGA. We've done since inception, really, and it's been very, very useful to us. It gives structure to our goals. The principle is that each block builds on the block under it, and that every block is a logical step forward, and it's figuring out that logical step forward. This helps with focused decision-making, and what I mean by that is being able to say no to anything that doesn't get you to the next block. Instead of trying to fix all of your inefficiencies at once, and in the process not fix any of them at all, working on them one by one, we've seen massive results from this. And we want to share this with everybody today, all right? All right, let's dig into it. In front of us, we have our life insurance telesales income estimator spreadsheet, okay? We use this spreadsheet to help agents understand how different increases in their performance, right? Fixing those inefficiencies can help their overall bottom line, their profitability. I've also added the goal setting building blocks here, okay? And in here, I've put in data for just fake data for a sample agent, just to do a case study on how this would work using our goal setting via building blocks. All right. I also put in the building blocks that we'd use here as well. And I'll walk through all of this. I'll input the numbers and we can see just how specifically this works. Okay. So on the left here, we have inputs, right? We can change these and that's going to affect these numbers over here, right? And the main thing to look at is advanced commissions after expenses, after your lead cost, all that, right? So this agent's paying $15 a lead, taking 10 leads a day, 4% conversion, and 10% spouse rate, meaning 1 out of 10 of their sales, they're also getting the spouse. Case size $750, average comp rate 95%. Average comp rate's a blending of level commissions and graded commissions because this is a final expense telesales case study. Now you can input term and, TV calls if you wanted to do, just increase the cost per lead, like whatever it is, you can input. This works for anything. This is a final expense telesales case study, all right? So, then you have placement rate of 70%. All of these are below average. They're inefficient, right? But if you plug this in, you know your numbers. And if you're in life insurance telesales, you've got to know your numbers. That's the number one thing. If you don't have a system where you can easily pull this data down and put it into the spreadsheet and understand exactly where you are, then you don't have the tools necessary to become successful. You can't scale, you can't grow what you can't measure, okay? All you need are these inputs. So, with this case study right here, with all these inputs, this person on a month, right? A month is 22 working days is how we're considering this, right? This agent spent $3,300 in leads and, they made, on average 8.8 unique sales, spouse sales, less than 1, total premium sold, total premium in force based on the placement rate, gross comp, and then total net, gross comp minus expenses. And then once you factor in the advances, this agent only made $321 this month, right? But if you look at the numbers and you know your benchmarks, this is easily improvable. If this is you're like, oh my God, I'm only making you see the deposits come in, right? But you're only profiting $321 this month. Obviously that's not doable. No, you can't live off of that. So in this case, you'd start your building blocks, right? You look at your biggest weakness, your biggest inefficiency, all right? And that's where we'll start. So block number 1, you fix your sales process, right? You're gonna go from a 4% conversion rate to a 7% conversion rate, all right? And look what this does to the numbers. It's gonna go from 321 and immediately you're making a livable income. If you just focus on that, you don't focus on anything else. Don't worry about everything else right now. All you're doing is working on your sales process, your presentation, just by making that change and focusing on getting to a 7% app out rate. And on these leads, this is, on these types of leads, you could probably get to over 10%. Some of the best agents are doing, okay? So this agent, block number 1, say no to everything else unless it's working on your sales process. So activity and sales process. And then spouse sell from 10% to 20%, right? 1 out of 5 of your sales at least should have a spouse sale attached to it. Okay, so this agent is underperforming. They're getting their presentation down, right? They're selling more of their leads. And by doing that, and by nailing this presentation, they're also increasing their spouse sale. So put that at 20%, 1 out of 5, and that will raise another $600 for the month. Okay, so now you're profitable, right? You're netting, after advances. Okay, and I should explain this too. This does not count months 10, 11, and 12. This is a 75% assumption. All right, so months 10, 11, and 12 commissions. You are actually making this in the future, but we're not counting this because we're going to pretend those are chargebacks, right? Because your 13-month persistency might be in the 70, 80% range, right? So we're assuming if it's 75% that we're not even counting this income that's coming later because this is going to be your chargeback fund. Okay, so we're at 3,600. Just want to explain that real quick. Now, you've done that. You've gone to 7%. You've done that over a month. And you've gone from, your spouse sell rate is to 20%. Again, you need to be able to track this stuff. If you're not in a system that can track this stuff, you can't scale, you can't grow what you can't measure, right? You won't know your inefficiencies. You have to know these numbers. All right, So going from 10 leads a day to 15 leads a day. Let's see what that does. So now you're at 15 leads a day, and now you're profiting $5,400 a month, okay? But the thing is, when you go from 10 to 15 leads a day, you want to make sure you maintain that 7% conversion rate that you just grew and that spouse rate, right? So you maintain that. And now let's just say, you go from 10 to 15 leads a day. This is all maintained. Now you're focusing on increasing your placement, right? So how do you increase your placement, right? So you can make sure more of the final expense policies you write successfully draft. So you can make sure you're doing Social Security drafting dates. You can make sure you're using we use something called GUI-ACT, so you don't have a payment that doesn't go through on the first draft and results in chargeback and you trying to get them on the phone again, right? And so you want to verify the routing and account information and make sure there's a good chance of money being in there. The system we use in our software does that for us, okay? So that's another way to increase placement, all right? Verifying the routing account number, Social Security drafting dates to make sure that there's money in the bank account. So Social Security drafts the day they get their Social Security payments, right? So you're the first hand in that cookie jar, right? So that's a way to increase placement. And of course, just being better with your presentation as well will help with placement rates, all right? So let's just say you increased your placement from 70% to 80%, which is a benchmark. You should be at around 80% placement rate with final expense, all right, or more. So now you're up to $6,900 a month, right? Profit, all right? So your total net that you received is $10,000.60, but after expenses and everything, you profited $6,900. Okay? Now you move on to the next block, right? Let's just say you've been working on your scripting. You worked on your close, right? Because a case size of $750, that might be good for face-to-face agents, but for telesales agents, we're working with a whole different bucket of seniors, all right? And our average premium is higher. So we're not making, it's not $750. Our average premium on a outbound lead is $940, right? So let's just say you increase it just to $900. Okay, let's see what that does now. And how do you do that, right? In your close, you have to have a presentation where the close rate brings you a higher average premium. We use something called a max offer. We build up, throughout the scripting process, we talk about inflation, just building up the value, building up how much coverage they need. And, we start with what we call max offer. And we tell them the max they can qualify for, give them that rate, and then we downsell from there, okay? And doing that, we're getting much higher average premiums, and we haven't seen a change in persistency, okay? So that's, again, that's another thing that a lot of people tell you. If you oversell, right, more is going to fall off the books. It's not true. We're seeing the same. We see no difference, okay? So let's just say you implement, you work on your close. You start doing the max offer. You get better at it. You get better at even the downsell. Even the downsell is more than $900. And then you downsell again back down to, a lower amount just to get something on the books. That's how we do it. That's how we script it. And that's how you can get your average case size up, is just getting the training, getting the reps in on your close. So now you got it up to $900, right? You're now making 6 figures a year. You're on a run rate of profiting 6 figures a year. But your goal is $20,000, right? That's what we're trying to hit here. So, you got that down. Now you scale from 15 leads to 20 leads a day. Very doable. All right. So you scale to 20 leads a day. You want to make sure you're keeping that, 7% sales rate. You want to make sure you're selling 1 out of 5. You want to make sure your average case size is still $900. You want to make sure your placement rate is still at 80%. With this volume in leads, increase. But now, after that, now you're profiting over 12 grand a month. All right. So let's move to the next block. You implement referral systems, right? And so your lead cost goes down just a tiny bit because you're getting these referrals that don't cost you anything, right? So let's just say your cost per lead is $14 now because you have a flow of referrals. Might not be many, but you're just getting referrals, right? And because of that, and those referrals convert at a higher percentage, your sales rate goes up to 8%. Okay, so that's the goal for this block, is you increase your conversion just by 1%. Your cost per lead goes down. And now, after that, you're profiting 15 grand a month. Okay, I hope you guys can see this. You want to do this one by one. You want to, your one focus on each of these blocks should be improving that one thing. Okay, and then when you increase the scale, right, from, when I increase the lead from 20 to 25, right, you want to make sure you're maintaining that you have the capacity, you have the bandwidth to do that, because you're taking on more activity by doing that, right? So now we move from 20 to 25. We do that. We make sure we're keeping up everything. All of our inputs here are still the same. Everything's tracking the same. Awesome. Now we're making $19,000 in profit a month, right? We're doing that. We're, all of our inputs are staying the same, and we move to the next block. Block 8, writing more level business and qualify for commission increases, right? So now you're writing, a significant amount of premium, right? So premium in force, $38,000 a month. You could probably go to your upline and say, hey, I should make more money. I should get a higher commission, and they'll give it to you. And, so you can increase your average comp rate from 95%. Remember, this is blended, to maybe 105%. Okay. And plus, at this point, you're also working on writing more level business. So your level business versus graded mix, right? So your commission percentages will get higher with that as well. Okay. So if you're writing, let's just say 50% level business and 50% graded, and you need to get that up to 70% level business, 30% graded, that also has an effect on your average comp rate as well. Okay. So now we're there, and now we're at $22,000 a month. Okay. We've increased our comp. We've done all these things, again, brick by brick, block by block. We're building this thing up one at a time, saying, not focusing on anything else, maintaining, but growing one block at a time, one brick at a time, right? And so now you start cross-selling, right? You start cross-selling ancillary plans. Let's just say you're selling cancer plans, or, ACA or Medicare, or, annuities, things like that. And so you bring in another $3,000 a month, and that gets you to your $25,000 a month in profit. Okay. So it's supposed to say 25,000, not 20,000. That was your big goal. That's how you're going to hit it. Right. And so the biggest mistake agents make here, when they see these inefficiencies, when they're trying to be more profitable, right? From the very start, I showed like a $200 or $300 profit, right? They're not doing so well, but in reality, all you need to do is is find your biggest weakness, first of all, and your data should tell you that. When I saw a 4% conversion rate, the first thing you should do is get that to at least 7% if it's an outbound lead, right? Of course, that's different for every sort of lead type, but this is for a specific lead type that we have. And that's what it takes. A lot of agents try and fix everything at once. They work on all of their referral, retention, script, all that stuff. They try and do it all at once. Don't. Fix your biggest weakness first. Fix that. Completely fix it. If block 1 takes you 3 months to do, 6 months to do, that's what you got to do, right? You have to figure that piece out first. All right. So I'm not saying this might take a week or a month. Might even take you a year. It just depends on where you are, who you are, and whatever that is. But you go block by block, and then you can scale from there, So I want to encourage everybody that when you're setting your goals for the new year, or even if you're watching this video and, it's in the middle of the year, put together goal setting. Figure out your weaknesses. Use this spreadsheet here, right? And figure out your weaknesses, and then build on those, right? And fix your weakest link first, right? That's going to make you profitable immediately. And for most agents, that's the sales percentage, right? That's the presentation. Focus on that, then move. Keep scaling, keep moving, block by block by block. That's how you grow responsibly. That's how you grow in life insurance telesales, okay? Hope this goal setting exercise helped a lot of you. I know it has helped Digital BGA a lot. Again, it really puts structure into our goals, right? When you see everything that you want to accomplish, you have all these things you need to do, but you got to handle it one by one, task by task, build skill by skill. That's how this business works. That's how you grow in this business. So hopefully this helps a lot of telesales life insurance agents out there plan for growth. All right, block by block.